If you've been watching the news lately, you've probably heard that mortgage rates are finally starting to drop. So naturally, I'm getting lots of questions. Is now the time to refinance? The answer is maybe. It depends on your current rate and whether the numbers behind a refinance actually work in your favor. Because refinancing just to lower your rate only makes sense when the math makes sense. Here's where I start every analysis: the no-fee loan. In this case, no fee means the lender covers standard, non-recurring closing costs, things like appraisal, credit report, title insurance, escrow fees, recording, and notary. These costs aren't rolled into your loan balance or paid out of pocket. They're absorbed by the lender, often in exchange for a slightly higher interest rate than if you had paid those fees. Now, if you're not paying fees and you can lower your rate, even by a small amount, it usually makes sense. You think of it like shopping for home insurance. If you find a better deal that saves you money and doesn't cost anything to switch and you get the same coverage, why wouldn't you do it? Now, I get it. Refinancing is not fun. You'll need to provide some documentation, sign forms. Most of it's electronic these days. And yes, it takes a little effort. But if the savings are real, it's worth it. Another reason people hesitate, wonder, what if rates drop even more? Should I wait? Well, let's say today you can drop your rate by 0.5% and save $150 a month or $1,800 a year with no fees, but you decide to wait. A few weeks later, rates drop a full 1%, and now you could save $300 a month or $3,600 a year. Great, right? So you lock in, close the loan, and months later the rates go even lower. Did you make a mistake by locking in too early? And what if you didn't lock in? You're watching rates decrease, and you're still waiting, even though you could have lowered your rate and paid no fees. But what happens when a global event sends those rates shooting up and you miss your window entirely? I mean, here's the truth. There's no crystal ball. Anyone who says they know exactly what rates will do next isn't being honest. We make educated guesses based on economic trends, but rates are influenced by dozens of unpredictable factors: wars, inflation, global markets, even political shifts. So here's my advice. When the math makes sense and the savings are worth the hassle, lock it in, start saving now, and if rates drop again later, you should be in a position to refinance again, especially if you're using a no-fee loan. Since the first loan didn't cost you anything, it'll make sense the next time. Now, one thing to keep in mind: lenders don't love it when you refinance again within 6 months. Even though there's no prepayment penalty normally to you as a borrower, wholesale lenders often charge mortgage brokers like myself a penalty if the loan is paid off too soon. Sometimes that penalty equals the entire compensation we earned on the loan. That's why I ask my clients to wait at least 6 months before doing another refinance. It protects the integrity of the loan and keeps the door open for future savings. I've helped hundreds of clients use this exact approach, methodically lowering their rate over time without paying fees and without gambling on perfect timing.